Hey everyone, welcome to this brand new episode of Phenoms. Thanks so much for joining us for this one. It's really good that you would stick around because today we have Ankit Mehra, and he's from GyanDhan, and he just raised $5.5 million. And we're going to discuss this amazing journey with him today. So, Ankit, how do you feel today about that round?
Thanks, Mark, for having me. As far as the round is concerned, it feels a great validation of what we've been working on for the last 10 years. And it's necessary fuel to help us get to the next level.
Yeah, this is really cool actually. And before, we dive deeper into the journey, can you take us back in time when you were still young? How were you if I was to know you, for example, in kindergarten?
Oh, I'm not really sure about kindergarten in terms of how you would know me in kindergarten. But I think growing up, two or three things stood out for me. Uh, And I'll give one example, which is really more pertinent to what I'm doing at GyanDhan, which is essentially in the business of financial services. So I remember as a kid, my father is a businessman, and he taught me a lot about money management and stuff. Uh,
Hmm.
so I think one of the things I did as a child was I used to get some pocket money from him, and I used to work in his office, and I used to kind of fleece him for the number of hours I used to spend there. But whatever money I used to make, uh, rather than buying up stuff, I used to invest that money, so to speak. And by
Really?
invest, I mean I used to lend it back to him, or lend it back to my mother, or lend it back to my cousins at some ginormous interest rates. And I used to keep on calculating the interest and make sure that I collected back on that interest. So I think
Wow.
that is something I never knew that I would be doing that as a business later on in terms of being in the lending business. But that's an interesting tidbit for me. Uh, Fairly early in my childhood, I think I was in grade uh, two or three when I started doing getting the money, and I probably started calculating the interest rates somewhere in the third or fourth grade.
That's crazy. It's so young. And, most kids, when they do that, they maybe think about getting pocket change money from, their parents, maybe at like 8 or 10, but you started way earlier. And, what type of influence do you feel like it had later in your life as you did that?
So I think again, going back to what I said, kind of being raised in a background where everyone was a business owner per se, I think it taught me a lot about managing money. So I think I was fairly frugal, and I knew how to build a balance sheet. I won't even go to that extent. I knew how to build a balance sheet, but at least I knew how to manage my finances, personal finances. And I think that frugality or the thought process of your uh, revenue should be greater than your expenses has really shaped a lot of my overall thinking, even in a startup world.
Wow. No, that's amazing. Actually, it's extremely rare to hear that. And can you tell our viewers when did you start your actual first business and how did it go?
Sure. So I think GyanDhan is my first business. If I discount the fact that I started money lending, or I was trading some I used to buy comics books and then trade them with friends and so on and so forth. If I leave those side gigs aside, I think GyanDhan was my first formal venture, and we started this back in 2015. Uh, I just graduated out of B school, and the journey goes like I got into B school and I left Capital One back in 2013, moved from DC to Spain, Barcelona to join ESA Business School with the thought process that I'll do something in the sports sector. So I learned a lot in my childhood. I feel a lot of good qualities I gained were on the sports field, working in a team. And I thought there's something that needs to be done in the sports ecosystem in India. And with that thought in mind, I moved to Spain, and I felt that financial services was done. I was done with that chapter in my life. It just so happened that when I went into ESA, I saw a lot of my colleagues were struggling to get loans to pay for an education. And coming from a Capital One experience, it just didn't sit right with me. I felt like, hey, if you're getting into a good school, why shouldn't someone take a bet on your future employability outcomes? And I was effectively trying to, I would say, judgmentally underwrite my peer group to begin with, saying, hey, I probably will give a loan to X, might not give it to Y. And I think that idea stuck at the back of my mind, and I kind of pondered on it. Still worked on my sports idea for a bit, but I think by the end of my first year in MBA, I kind of decided that hey, this is something I want to do because one is this was going to be a high impact activity. Plus, second thing idea was for me it was a case of it's probably the first financial services product most of the customers will be encountering in their lives, a first meaningful financial services product. And the whole idea of, hey, if we can hit this right, we can actually theoretically achieve the holy grail of banking, which is doing everything with that particular customer, talk about data and using the power of data and so on and so forth. So I think that whole idea of, hey, if we can do this well, we'll first create an impact at scale. And then secondly, we can actually create a lifelong business on top of that, which is centered around that customers, is something which attracted me. And I said, hey, I think probably we'll take a stab at sports sometime later in the life, but I might want to start this and do something in this space.
Love it. And can you tell our viewers if you had some resistance when you tried to start the business as you were still in your university? You were studying, and maybe your family or even friends thought that you were crazy for even trying to start with that. Like, can you maybe share a few moments there?
Yeah, so I think that definitely has changed over time. I mean, today it's the startups are much more accepted in the Indian uh, kind of society. I think I was this was back 2013 when I left my job at Capital One and moved to Spain. And I think before even starting GyanDhan, when I told everyone that hey, I'm leaving my job at Cap in the US and moving to Spain to pursue an MBA because I want to do something in the sports sector, I think that itself probably made everyone conclude that I had gone crazy. And I had a lot of resistance in terms of why are you leaving this and kind of moving to Spain of all places, and you want to start something in sports. So I think I did get a lot of resistance. As a matter of fact, even when I was doing my interviews for the B school, I think the admissions team was asking me constantly in terms of you've written this essay about trying to do a thing, and I could feel in my interview that they were also probably suspicious of is this guy crazy or something. So I think it was not just the society or not just family back home or my friends. It was probably even the admissions committee that thought I was crazy to some extent. Uh, yeah, once I thought about yeah, and then again, I remember comments from the broader family around, hey, why do you want to do this? I mean, you had a good career, you had a good salary. I mean, telling us that you're going to give it all up and start something which has no future per se, or I mean, it's a question mark. So I think that was definitely a big thing. There again, I think I was lucky that at least my father and my family, my immediate family, which is my father, my mother, they were fairly receptive to it. They said, okay, fine, try it out. And then kind of my wife also, now wife who I married just after B school, she was also receptive to it. So I think the immediate family was fairly accepting of the idea. I do think if someone were to kind of ask them, they would say he's crazy, or or they might have thought that hey, this is an idea he'll kind of run by for another year or so, and then he'll come to his senses, and then he'll start doing something else. Maybe that was some of their thought process, but at least they didn't. They let me flow with it. Is all I would say.
Interesting. And how did you counter the resistance? If you had these conflicts with them where they were doubting you, what was your mindset to approach them and try to convince them that this is actually a really good step for me and it's going to absolutely change everything in your future and theirs, possibly?
Um, So I wouldn't say that to be honest, I wouldn't say that there was something I did to say that, hey, it will change something in the future. Because I mean, at the end of the day, when you're doing a startup, you can create any Excel models and stuff, but at the end of the day, the probability of the startup succeeding, I mean, it could be $1 billion outcome, it could be a $10 billion outcome, but the probability of succeeding itself is so low that I don't think anyone would do a startup, or most people wouldn't do a startup based on an Excel model. So I wouldn't be able to convince someone in terms of why this should be done and why this is a rational choice. I don't think rationality will be a very critical part of it. I think it's more to do with the fact that what I was able to convince myself and the others was really a fact of, hey, I mean, I'll give this a shot and I'll give this my best shot. But at the end of the day, I have supreme confidence in my skills that hey, if this doesn't work out, I will have learned five things and then I can again join the workforce or I can do something else. I think it was more that than the fact that hey, I said hey, $1 billion and 5% of it is still a huge number or stuff like that. Because I don't think that that's really a way to convince. I mean, that would be a wrong way to convince it. Because again, at the end of the day, I'm not a VC that will be making 20 bets. I'm making a zero or a one bet. Right. So for
I
me,
love
it's
it.
not really a case of I'll do a 5% of $1 billion or something like that. It's a zero or one outcome. So it was really a function of me being comfortable in my skin saying, hey, we'll try it out, we'll see if it works. And if this experiment doesn't work, then we'll just switch courses and we'll figure out what else to do. There'll be other things to do.
I love it. This is the true entrepreneur mindset. And a lot of people get way too nervous when they try, to start a business. They go into numbers, they go into the law firms and get themselves structures and all that. When you just need to get out there and just risk, take the risk, right? And I love that you did that. It actually worked.
Yeah, I mean, I think I talked to a few of friends, few of the friends over the years who have discussed around, hey, I'm thinking about doing a startup and stuff. And I think for me, the biggest indicator ends up being if someone is trying to do a calculation of, hey, my current salary is X, when will I start making X, and so on and so forth. I think that's where I see the first red flag, and I say probably you shouldn't be jumping into it because 6 months into it, you'll realize you're not gonna make the similar amount of money, and then you'll start questioning everything every day. If you start, if I mean, as it is, there are a lot of challenges in startups. So if you don't give yourself that sufficient time and that sufficient conviction, the first hurdle you hit, you will say, hey, I had $1 million pay package, or I had $100,000 pay package, whatever the number might be, and you'll start comparing and you'll say, hey, this is just isn't worth it, right? In my mind, that kind of a mindset is best suited. You can possibly join another startup at a senior level, but doing it on your own is probably not your cup of tea at that point in time.
Yeah, this is really well said also. I love that. Definitely gold. Some people expect way too much from starting a startup. Just already the first steps, it's so difficult to get things going. Maybe you can share your difficulties because the way that you're explaining this, I'm sure you went through extremely brutal phases in the beginning. Maybe you can recall a bunch of brutal initial hurdles that you went through.
So again, I think even before we started GyanDhan officially. So, like I said, I was debating about this idea, and I finalized at the end of the first year in terms of this idea. And then I remember me in my apartment in Barcelona, kind of putting up a giant board and trying to ideate and doing what am I gonna do, how am I gonna do
Wow.
it, and stuff. And I think the first hurdle I hit was really, I mean, what am I doing, or who do I bounce this idea off of? And I think that
Mm,
was, and I was getting into a vacuum or echo chamber quite a lot. And I think
mm,
that's where I kind of realized that probably I needed another person as well. And I reached out to my co-founder Jainesh, who was still in Capital One in the US, and we'd worked together, so I knew him, and I knew he had an interest in this field. So that's when I reached out to him and said, "Hey, I mean, I, I think I need someone else, and kind of you have an interest. Let's see if we can figure this out together, because otherwise I might go crazy just thinking of different things. So I need someone to uh, kind of question me or
mm.
critically. I mean, it's almost like today's chat GPT. I'll put a prompt and ask it to critique me. But the idea really is that's the healthy communication in terms of I might have an idea, you will critique it, and you will have an idea, I'll critique it, and we'll together build something. So the first time I point was really hurdle was really yes. I mean, I've told my parents or I've told someone else that ABC that hey, this is what I'm gonna do, but then how am I gonna go about it? Who is gonna be there with me in this battlefield, so to speak? I think so. That was the first, I would say, mini hurdle, trying to figure out people because again, I was in B school and there were a lot of people who were doing stuff. So I was trying to,
Yeah.
like, I was critically underwriting people at the start of the B school. Here again, I was critically judging people in terms of should I reach out to X or Y as a co-founder, as a potential co-founder,
Yeah.
as a potential partner in this venture or not. And even going back to my earlier networks. So I think that was one of the first mini hurdles, so to speak. I think apart from that, obviously, I think hiring was always a is and even today, to this day, it remains a challenge, right, in terms of
Mm.
hiring the right people. There again, I think, so I would say there, I think our journey has been one of those journeys where there have been hurdles along the way, but we've been fortunate enough that we've had the right support system or the right mentors or the right people who've helped us along the way. So again, the idea was we thought, okay, this will work, and we have a better way to predict what future employability of students will look like, will make the world a better place theoretically. You come back to India, you start to talking to people, and you realize the reality is way different, right? But I remember, and then you're wondering, and I remember Jainesh took a break from Capital One to come and kind of see what's happening on the ground before he decided to make the next move. Uh, I think so. The question was really, is there a market itself, and how do we even address that market? I think again there it's all step by step because I think, like I said, got lucky in the sense that I remember us going to a B school in India, ISB, they were having a hackathon and we just went there, the two of us, and we said, hey, let's just pitch this idea there. And we pitched the idea, and then at the end of the hackathon, they said that, hey, you guys seem to be very well prepared, so it's not really a hackathon that you participated in or stuff like that. But we couldn't care less, and so that said that you can't qualify, so to speak, for the prize, but we
Oh,
couldn't care any less or any more because again, at the end of the day, the judges at that event uh, realized what we were trying to do, and they were willing to help us. They were willing to mentor us. One of the judges ended up being an angel investor. So I
really?
think for us, it was a case of yes, we didn't win the hackathon, so to speak, but we got what we wanted out of it. We got the right
That's
connections,
awesome.
right people who could help us on the next stage of the journey. So I think, and then like I was saying, hiring. The question was, okay, how do we go about it? I mean, both Jainesh and were at Capital One in more of a business analyst role, more of what you would call it internal consultant kind of a role. So none of us were into coding. I mean, we done coding back in undergrad days. So when we started GyanDhan, I again restarted coding, built up the entire thing. But again, it was really a case of who is much better than us, right?
Mm.
Again, the you can look at it as a hurdle. Like I said, we had sufficient support from our networks because we ended up getting one of our juniors from college who wanted to work remotely from the hill stations, and this is when remote working probably was not that common. But I
Mm.
think we got it through a network, and the guy was super smart, and he was kind of, I would say, he was generous enough to join us in those early days to say, hey, let's do this together, right? So he subsequently moved to the US. He's doing something else in the US at this point in time, but I think he was critical in terms of getting us up and running at the outset. Uh, I think another hurdle could have been, I remember once we were uh, kind of raising funds and I think the funds were getting delayed, and we were probably at a place where we could have run out of funds in 2 to 3
Really?
months, right? So that was a bit scary, and uh, kind of am reminded of that Silicon Valley episode where someone is trying to kind of strike a deal, and then the guy walks in and says the coffee machine is not working. I think that was the same exact incident that I had experienced that I'm talking to an investor about a potential deal and someone walks into the office and says, "Hey, this is not working," or some XYZ is not working. Uh, but yeah, I think again, things worked out, and I go back to I remember someone making a quote of startups is about kind of staying alive till you get lucky. So I'm still on that journey of I'll stay alive till I get lucky, and that's the whole beauty of it.
I love it. There's just so many golden nuggets right there. Hopefully, the viewers are taking notes right now. And I'm curious. Okay, I have a lot of questions at this point, but can you tell our viewers, before you actually raised the funds, were you thinking in the early days of keeping it bootstrapped, or were you mostly aiming already from the get-go to go ahead and raise funds?
So I think the business that we were, so I'll just give a quick overview that we started. The segment that we were trying to solve was the segment that I talked about around how to help students get loans to fund their higher education. And the initial idea was really, hey, we can build out a model to predict future employability of students. And we can provide this as a service to banks and stuff, other financial lenders, and make them intelligent. I think if we had just stuck to that part of the business, I think probably we would have bootstrapped the business. Uh, or we would have tried to bootstrap the business. Again, neither of us come from very affluent backgrounds that we could plunk it millions of dollars into it. But I think theoretically we could have done that. The difference was when we started talking to folks on the ground, we realized that there were a lot of other issues in the system. And that's when we realized that we actually need to handhold the customer till the final end because, again, even if I provide the most intelligent service to the lender, at the end of the day, lenders are not interested in lending to this asset class because they are concerned about perceived risks. So we'll have to do a lot, and for that matter, they are not even aware of the right processes how to manage this product. So we realized that we'll have to do a lot of hand holding. We'll have to actually operate the marketplace almost like it's not a listing platform, but a managed listing platform where we are quote unquote holding the inventory as well at some point in time, so to speak, theoretically. So I think given that uh, approach, we realized that hey, we will have, and also the aspirations of being a lender at some point in time in the future. I think we quickly realized that we will be raising funds. I think it was never a question. Now, again, with the benefit of hindsight, and that's something I tell everyone as well, that if you can bootstrap for as long as you want, please do that. But I think there are certain businesses, and like the recent fundraise that we've done is to expand the kind of our reach as a marketplace and stuff. The key thing is we had already reached a place. So if I go back from that journey to current place, like we last raised our last round was in 2020, and after that we had been profitable. So I go back to that frugality bit that I'd mentioned. We had been profitable, although on a lower base, but we had been profitable. So it wasn't really a case that we needed money. But the discussion was really, hey, in terms of if we continue to compound at a certain rate, it'll take us X number of years. But what if we can raise money and kind of, again, hyper fuel that machine and kind of do what we could do in 10 years and compounding in 2 years? Right. So I think that was the reasoning for us to raise additional capital that we raised recently. And obviously, getting the right investors helps. But I think it wasn't really necessarily a case of we had to raise money. It was just a case of we knew that this will help us get there faster.
Yeah, I love that. And you basically said approximately 3 months in, you almost crashed, right? Like, so how do you view that period? Was this one of the most difficult parts where you started racing, or did you already anticipate the potential crash, or just running out of the runway, even being bootstrapped? Was it like a long time ago that you started racing, or how did that go?
So actually, so we didn't. We started the business in. We started working on the idea formally in May of 2015.
Hmm.
We raised our first round of financing in June 2016.
Okay.
And June 2017 was the time when we raised another bridge round, and that was probably a time when we could have theoretically run out of money. Again, I say theoretically because I think I have full confidence in our team and full confidence in the people that they would have figured out. We would have collectively figured out a way to extend the runway, right?
Hmm.
So I think when investors ask me about runway, I get a bit puzzled about that question because I say, I mean, it's always an infinite runway. You can always tweak things out, and you don't necessarily need a runway. You can always manage things and figure things out so that infinite runway is the only answer. But going back to it, I think, like I said, initially we had an idea in terms of doing a tech kind of a product. Then we realized we had to do a marketplace kind of an approach. But what we had done at the very outset, Jainesh and myself, was we had an agreement amongst ourselves, and we decided, hey, this is the total amount of quantum we'll be putting into the business. And more than the quantum, it was a case of, hey, this is the minimum number of months we'll be putting into the business without questioning anything, without saying, hey, this isn't working or that isn't working. Right. So we decided that, hey, once we have done this thing, that's when we'll discuss whether we need to raise funds or we need to shut this down or we need to discuss the future course of action. It's just so happened that we were able to meet our milestones before those hurdles were hit, and so we said, hey, fine. I mean, now the question is let's raise funds, and we've gotten the right connect, so we are able to raise the funds.
And I'm just curious, how did you get to, meet these milestones? Did you do something specific? Did you do a pivot, or was there a strategic approach to that, or was it because you were extremely close to hitting a wall financially that you guys like panicked and completely changed, your approach to getting more funds?
So, sure. So, I think, again, when we started out in 2015, one of the things we decided early on was, and that goes back to the agreement that I'm talking about between Janesh and myself in terms of how much time will we commit, how much capital will we commit,
Hmm.
was we said that, hey, I mean, at the end of the day, first we have to figure out the business model. So, I think in some ways we've been very um kind of, I would say, anti the traditional wisdom of the 2010s in terms of fail fast, fail this, and all that
Yeah.
stuff. When we've pretty much we said, hey, like I said, we started in May 2015, but we actually launched the first product, the official website in April 2016. So what we did at the back end in the first year was really building out the model that I said in terms of predicting future employability of students, talking to different lenders. So we're doing a lot of market study. We're doing a lot of discussions with lenders in terms of figuring out the right way to approach this product, launch this product. So we spent a lot of time doing that stuff. Uh, and the benefit was we didn't hire anyone at that point in time, and later on we hired the first hire that I was talking about. So we didn't really run into that proverbial cash flow problem or saying, hey, we are running out of funds, right? So we chose to kind of say, okay, first let's figure out what will work and have that developed before we go out and say, hey, now we need to expand, we need to hire people, or we need to kind of see if this works. But in our approach was a bit different, saying, hey, first let's, at least in our mind and our theory, figure out, hey, this a valid hypothesis? And once we have understood that hypothesis very clearly and articulated it well for ourselves, that's when we'll go out there and we'll kind of have people who will help us either prove or disprove that hypothesis.
It's great that you're saying that, a lot of founders completely forget to speak with their potential prospects. You did that for a long time. Maybe you can tell our viewers for how long approximately, did you extend this strategy where you have to be in contact with the prospects, and what happened? What did you learn? What type of platforms did you use to kind of, follow up on the feedback and all that?
Yeah, so I think the segment that we were targeting is a B2C, is a direct to consumer segment, which is the students are going for higher education. But at the end of the day, the providers of capital are the big banks or the different financial institutions. So really, the problem that we wanted to solve was unlocking that capital. And so what we had to solve was getting a champion lender who said, "Hey, this segment makes sense." And the background, the kind of thing that we were up against was the fact that student lending is a high NPA asset class. There are a lot of losses in this segment, both in India, I think in the US also there are some similar issues. Right. So I think the thing was that we had to solve was getting that first champion or getting the first set of folks. And so what we did really was, like I said, first, again, how is it that we are different? How is it that we can solve this segment where other lenders have burnt money and continue to burn money? What will be different if they use us? How will we make them much more intelligent with this thing? So what we did was really talk to a bunch of folks and at different levels. Again, our private background at Capital One or our other networks from our college days and other days helped in terms of opening the right channels, talking to the right people. But we realized again that just putting up a website won't solve it. We'll first have to find the right backers who can say, hey, let's try this out. And so that's why when I say the first year, we ended up talking to probably 15 or 16 different financial institutions in India at different levels. Uh, and we started zeroing in on a couple of them uh, around the November December time frame of 2015, and by early April is when we kind of finalized with one of the lenders, and that's when we launched our operations at the end of April, and then we got another lender come immediately in. So we started in May, the first week of May, we were up with two lenders. But I think the key thing was really figuring out those first two lenders because this wasn't Unlike some other businesses, this wasn't really a case of, hey, I'll put up a storefront and there'll be consumers coming in. Because yes, consumers would have come in, and we would have gotten a lot of loan applications. But what we wouldn't have solved is the fact that there is no supplier of capital. And so all we would have had is on our website then would have been a fancy number saying, hey, we have sourced loan applications worth $10 million, but we wouldn't have a case of we have done a dispersal, right? And I think that this is something where you talked earlier about pivots. When we started GyanDhan, we looked at the overall education segment. So it was not just study abroad, students going abroad for higher education. There are segments within India as well that need to be addressed. And one of the segments that I worked during my B school days with a company based out of Latin America was trying to help coding camps. So all these coding camps that provide kind of uh, training to students who can then get into the job market, really funding those course fees. And in somewhere in the October November timeframe of 2015, we actually launched with one lender a product to address this segment, right? But that was an exercise experiment that we wound down in 15 days. Because the whole idea was what I just mentioned to you is we realized that we are getting applications. So getting applications is not the problem, but the problem is at the other end that the lender is still stuck on the old approach, which will not really solve anything. Right. There might still be some conversions, but it will not meaningfully change anything in the current landscape. Which is why we said, hey, it doesn't make sense. Let's just close this. Let's just continue focusing on the lenders that we are working with.
No, this is amazing. I think a lot of founders are, trying to close deals with their first clients and they don't necessarily know how to go about it. Do you maybe have some, secrets or just some general lessons that you've learned from onboarding the first ones or just convincing them to actually sign?
I think that's a lesson I'm still learning. But in my mind, the classic case of talking to your customer and listening to your customer, I think those are very, very critical things. If someone solves that, everything else gets solved. So every new thing that we launch or every new feature that we develop, I think, at least in my personal experience, I've seen where places where we have sat in our cozy rooms and theorized something and kind of built out something that definitely hasn't worked, but where you've actually gone out on the ground and kind of talked to a customer, whether it be a enterprise, whether it be a consumer, I think the learnings are much more detailed and much more valuable. Otherwise, again, we might come up with some fancy idea of, hey, the website doesn't work, or we need to make a better looking website. But the question is for what? I mean, if the customer gets the work done and customer needs something, that's the one we should be solving for, rather than yeah, trying to please ourselves or trying to please each other. But that's a journey. I mean, easier said than done. Like I said, I'm trying to do that, uh, and hopefully getting some success, more failures. But the approach really again is to minimize the number of failures and maximize the number of successes.
No, I think the failures are extremely important. From every failure, you can learn. At some point, you have the patterns and you avoid them, and then you start growing. Definitely, that's one of the keys to growing in a lot of startups. And at what point during that initial journey, before you got funded, that you started to have signals where it was really intense, and you were probably having meetings with your buddies and maybe even taking this decision together or alone to start raising, like what what were like the universe signals for you to start
Uh, in the sense that is this more related to fundraising or
the
just
funding?
in terms
Yeah,
of the
yeah, the
business?
funding.
In terms of the
Oh yeah,
business,
the funding
sorry.
itself. The funding, yeah.
Yes, I think the funding itself was, I think that was relatively easier, wherein the signs were, I mean, they weren't necessarily. I would say, I think the thesis was that, hey, this is a big enough market, the penetration is fairly low, lenders are not doing a good enough job, and we have a better, I would say, so-called mousetrap to figure out how to do this better. And so the idea was, hey, I mean, let's just figure out how to raise funds to build this out and kind of go to launch. So I think that was, and again, I go back to that hackathon where we got our first mentor who ended up being an angel investor. He also helped us in terms of, hey, this is what you can do, and kind of opened the doors for us. We raised our first investment from a few angels and the Indian angel chapters of Harvard Angels and Stanford Angels. So he was a Stanford alum. And so, I mean, it was just a case of he just introduced us to the group, and we had a conversation, and then one thing led to other, and we were able to raise the funds. So I think that's how our journey happened. I think on the customer front, it was much more interesting in the sense that, like I said, we launched in April, at the end of April, last week of April, and we started getting some applications. And we're making calls for the five customers who have filled in the form today. We are very happy about five customers who have filled the form today, talking to them. And the initial set of customers, obviously, are the customers who've been rejected by most of the lenders, and that they've just figured out, okay, there's someone else. Let's just try these guys out, whatever they are doing. But I think for us, the first signal came in the first week of May when suddenly we started getting a lot of applications one day, and a lot back then was we suddenly saw, okay, there are, I mean, I've opened up my uh, DB and kind of I'm having a 30 new entries. Like what does it even mean? And 30 entries are all from the same school, so something is happening. And that's when we realized that one of the first customers had gotten a loan. We'd helped him get the loan, and at this point in time, the loan was not finally sanctioned, it was still under process, but he ended up putting in the WhatsApp group saying, hey, these guys know their stuff. They are doing a much better job. They're helping convince the lenders to do a better job at that. And so suddenly all the folks in the WhatsApp group said, hey, let's give this guys a try. And I think for us, that was the first, I would say, a point of validation where we said, okay, something seems to be working, and we are doing something that the customer really wants. And the customer in this case is the final end borrower, not necessarily the lender. But we've said that, hey, as a marketplace, we convinced a couple of lenders, but now on this side of the marketplace as well, we do know that there are some people who will value this.
Definitely, definitely. Wow. And thanks for sharing that. I think, talking about this transparently helps other founders that are stuck with small numbers understand that it's not about the now, it's about the future as you start compounding the validation that you get these signals, right? So don't be demotivated if you don't have, small numbers in the beginning. It's fine. It's just going to happen with time. And do you remember on the funding side, how many no's did it take you to finally get your yeses?
Unfortunately, don't have the analytical data around that, but I can tell you that much that if I accumulate the number of no's I have received in the last 10 years, I think that will probably break most of the DBs out there. So I probably might need a big int kind of a variable for that. But, yeah, so I think we did get our healthy share of no's. Like I said, that angel investor helped us kind of get introduced to the Stanford Angels chapter. So that eased things up. But obviously, we were talking to other investors, and we were getting our fair share of comments all across the board, right from, hey, keep on trying and we'll figure out, or build this or build that and then come back to us, or so show some traction and then come back to us, or hey, you guys are too green, or I mean, all over the place. But yes, I mean, we did get our fair share of rejections, but I mean, safe to say uh, that I think the hit rate was fairly abysmal. But again, all I need as a founder is that one conviction, and that's pretty much it. I mean, I have to be comfortable with listening, hearing no. Uh, I just need to be clear in terms of when the feedback is relevant for my business, and take that constructively and change things which I'm doing incorrectly, and then places where you might have an opinion and I beg to differ with that opinion, and that might not be relevant for my business because you don't understand my business also. I mean, I think in my mind, I'll be brutal that also in my limited understanding, that also happens, that you might have looked at something and you're trying to kind of force that. I remember one of the examples is, I think back in 2015, when we were not even raising funds, to be very clear, because I'd moved back and I started working on it, and I did get a few calls from different VCs, say, let's talk. And so again, me not knowing anything, I'm saying, okay, fine. I mean, someone is talking, wants to talk to me, let's talk. And we're talking to it. And then I remember a couple of VCs saying, hey, why don't, I mean, looking at this student lending segment, great. Look at it, but why aren't you trying to build something? There are a couple of startups based out of China that have become a unicorn that are doing some micro credits for students and stuff like that, and blah blah blah. Just build that model and make that for India. And I think we just end up saying that, hey, I mean, there might be other startups doing that, but that's not something we wanted to build. So, I mean, I don't want to raise funds just to make a XYZ for India. I mean, I wanted to solve a certain problem statement just for the raise of, just for the sake of raising funding. I'm not going to change my pitch and suddenly start so-called pivoting because that will allow me to raise funds.
Wow, you held your ground, and some founders they basically fold under pressure. They're so short on cash that they're gonna go ahead and say, "Okay, fine, Mister, Mrs. Investor, I'm gonna listen, to your advice, and I'm gonna do the pivot," and then they're gonna lose the essence of their mission and their why. And you held ground, and you know, that's very powerful.
Yeah, I think again goes back to the team part of it. I think we've been fortunate that along the way we've had folks who've committed to the idea, the whole frugality point that I mentioned earlier on. We never kind of uh, scaled beyond our means and tried to do a very kind of unit negative business with the hope that someday it will get solved. So there have been instances in our journey where we have kind of made conscious choices of not doing some stuff which others were doing and raising a lot of capital on the back of, but we couldn't see how this would translate into reality. So we chose to stay away from that. Now, obviously, that impacted the fact that we would get a lot more no's from an investor. But I think yeah, I mean, I think we were just comfortable in our skin saying, hey, this is something we don't believe will pan out. So we'll kind of stick to our guns and we'll live. I mean, we'll see. We might be
Yeah.
wrong, but again, at least we have this hypothesis, and I'm not going to change my hypothesis uh, just because someone is promising a cash.
No, no, I love that. I love that. And I just wanted to do a little bit of math. Like, if you were to tell me approximately how many no's, let's say 500, 600, 800, do you know approximately a number, like instinctively,
In terms of
in terms of how many no's or rejections you received to actually fund the round?
okay, so on the first round, approximately, including the different VCs I talked to, I think it was close to 70 people I had interacted back then. Uh, that was the close to the number. But like I said, I think over the years now I've talked to the same VC probably 20 times and stuff like that. So if I were to compute that and so on and so forth for the different rounds of financing, that number would be pretty gargantuan. But I think for the first round of financing that we'd received from the angels of Stanford and Harvard, I think at that point in time we had talked to a bunch of VCs, we had talked to a bunch of angel groups as well, individual investors as well. Yeah, so I think it was, I mean, I have that Excel file, like I said, not well documented, but I think the number was close to 70.
So I'll divide 5 million by 70 no's. So each no was worth $71.4 thousand.
No, no. So actually, that's why I say that this 5.5 million is the recent round we had raised. The first round we had
Uh-huh.
raised was back into 2016,
Ah, okay,
and
got
that
it.
was the 70 no. So that's why kind of I'll say that if I go back to this, what do you call this 5.5 million round?
Yeah.
I think for this I. The question is, do I accumulate all the no's I have received over the last 10 years, or do I just talk about this 5.5 round?
Let's do the 5.5 only. Yeah.
Right. And I think
Approximately.
I think as far as this round was concerned, I think uh, over time I would say we maybe matured a bit, and uh, I think I think the number was still close to 35, uh,
35
but
no's.
maturity part that I'm mentioning out was that what we decided to do some time back was, so one is when we raised the round before this in 2020. After that, we decided to say no, not talk to investors or potential
Really?
investors. because we ended up saying, I mean, we just used to, I mean, we discussed with investors in terms of
Mm.
different investors, in terms of the markets, in terms of kind of exchanging notes and stuff. But as and when it came to fundraising, we were very clear with anyone. So if Mark would come to me and say, I'm looking at investing, I'm looking at options, are you looking to raise funds? I would tell Mark that, hey, Mark, let's talk, but we're not looking to raise funds because currently we're just focused on the business. So we'll first execute and then we'll look at raising funds. So I think what we did between 2020 and 2023 was we didn't even actually, or 2022 was we didn't even actually go out and talk to any investor for the sake of raising funds. And we just said, hey, let's just prove out whatever we had raised for and prove that hypothesis true or not. And I think 2023 was when we decided, okay, we've done what we needed to do. Now it's time for us to raise the next round. And that's when we said, okay, let's start talking to people. And I think the first, I remember us giving a mandate to someone and saying, hey, let's do a road show, or let's talk to a few bunch of investors. But we shut down that mandate within a month because we talked to a few folks, but we realized that we're probably doing a lot of scattergun approach and kind of reaching to people who might not really realize what we are trying to do. So again, we'll end up with the issue of a mismatch. And so after the first month, we kind of pretty much pulled back and said, hey, kind of again made a sheet saying, hey, this is a great investor, but it's not a great investor for me for XYZ reason. And then we narrowed it down to a very, very small group. So, as a matter of fact, in 2024, so we announced around in 2025, it was, I mean, we were done with our due diligence 2020 at the end of 2024. But I can tell you that in the whole of 2024, uh, we probably talked to five or six investors at best, right? For the purpose of the current round, right? Because we said that, hey, I mean, yes, some of the investors will talk, but we'll tell them that, hey, you might be, we might be relevant for you at a later round, so let's keep on exchanging notes. And some investors will just respectfully say that we are not the right fit because what we're trying to build does not align with your thesis. So rather than us trying to hope, hope is not a strategy. So if we know someone is not the right fit, rather than putting them as a no, let's not even waste our time doing that. Like, I mean, but the same time is better spent on the customer.
No, I love that. And do you remember how did you celebrate when the funds hit that bank account? Where were you when you received the notification? Okay, the funds are there. Can you share, that moment with the viewers?
Uh, so I think it was more a relief that it's true. It's finally hit the bank because, like I discussed with my team, that I think there are so many stages that until and unless the money actually hits your bank account, you will never know that the deal is done because it can uh, break down at any stage. So the first thing that first I would say. First feeling was really a sense of relief. Okay, due diligence is done, the money is in, there is no turning back now, or there is no way this deal can fall at this stage. So I think that there was definitely a sense of relief. Followed quickly with, to be clear, sharing it with the broader team, saying, "Hey, I mean, I think we've, like I said this, at the start of this discussion, validation of what we've been working on, but more importantly, uh, a show of conviction from the incoming investors. And at the end of the day, I sent them a mail saying, hey, this is something for us now to prove. Uh, Obviously scale to much more customers, but then we have to prove that what we were doing we can do at a much faster clip and do it much better. So it's almost a, it's not a, I mean, we did have some party, I think, or some kind of some celebration, cake cuttings and whatnot. I don't know. I don't remember. But again, I think it was more a case of, hey, we have to now prove it. Because again, at the end of the day, for us, for me, I think it's function of if you're able to scale it 10 times and do it profitably, I think that will be a thing I would much rather celebrate rather than trying to say, oh, $5.5 million has hit the bank. So that's why kind of, at least personally for me, I think for the 5.5 hitting the bank was a relief, satisfaction that yes, people had shown conviction in what we're trying to build and have aligned with our vision. But I wouldn't necessarily associate elation as much with that as I would associate a satisfaction or just a relief. Relief is the right word because again, then you know, okay, you're done with due diligence, you're done with signing reams and reams of paperwork. You can get back to building.
I love that. And, if we go back to the days where people doubted you, at this point you have the funds and people believe you, right? So there's huge players that are backing your vision. How does that feel compared to the past where you were up against, the wall of, uh, you got this, you still don't have proof that this can work back in the past, but now you got the backers. How does that feel, this difference?
I think uh, so. I'll break that into two parts. One is essentially as long as I have customers, as long as people are seeing the value in whatever we are trying to build, I think that is much more much more it's a much more stronger indicator than whether I have uh, any random person showing conviction or not showing conviction, right? Because at the end of the day, if the user is using the product, whether it be the customer, student, or whether it be the lender, I think as long as they are uh, kind of there is a unit economics there, as long as that is there, I think that to me is a much more stronger indicator than who is supporting me or who is not supporting us. Because like I said, I think it's just a case of finding that one person. I mean, obviously even today, I mean, I wouldn't sit here and say we have proven everything. I think, like I said, it's just a money that has been given to us to prove the next three things and get to the next level, right? So the answer really is you need to find that one backer. So I think even today there will be a lot of people who will have uh, no conviction in us, who will say, "Hey, doesn't work," or they might fail. Again, I think I'll go back to that same thing which I started when I said that, hey, I started off with the saying that, hey, there is a hypothesis I need to prove. If it doesn't work, I'll confidently do something else. I'll learn some things from this experiment, right? So I think again, there isn't really a case of uh, feeling any different for people who didn't believe in the conviction. Because again, like I said, that let's say if Mark disagrees with me, and Mark has a valid point, uh, or if I go back to that Chinese example, right? Mark might have a different vision, right? Doesn't make Mark right or me wrong. It's just two different visions. So there isn't really nothing to hold grudges against or feel happier about me having raised funds and stuff. Those are just two different convictions. Now, yeah, so I think I look at it more from that standpoint that your hypothesis is different, my hypothesis is different. Uh,
Yeah, I love it. It's very pragmatic, and it's amazing what you've accomplished at this point. You're rather early still in the journey, and you've already raised great funds. You're already backed with interesting players in the field. What was the most brutal change you had to do when you started with the current round? At this point, you reached your goals, I guess. What's the largest changes that you had to implement instead of your way of doing things, your organization, and all that?
I think I would say during the due diligence or during the discussions with the investors, one of the changes we did have to do or we realized we had to do was, uh, I think as we grow, I mean, it's the teething troubles or part of growing up. I think there was some areas where we hadn't really put in a lot of structure,
Hmm.
right? So the idea was really, hey, you need to put structure around things because what got you here will not get you there. Right.
Yeah.
So I think the biggest thing was really getting over that and trying to explain that to the rest of the team as well. That hey, I mean, yes, you might think that why do you need to do X, Y, Z, but I mean, there are very valid reasons why it is needed. I mean, the simple example I'll say is like, or simplest equivalent I will say is that hey, someone might be able to remember four parameters and how do those parameters change, but then you try to explore that and make it 40 parameters, probably the number of people will be able to remember this and significantly kind of make inferences out of this will be fairly limited. So when it's a 40 parameter thing, you need to be clear in terms of what are the two or three critical parameters, and that's the structure part that helps you figure out what are the two or three key parameters, and then everything else can be an indicator of sorts. So I think the biggest change was really trying to do that. Yeah. I think that's probably the biggest change. And then on an ongoing basis, and I don't call that as a change, but that's an ongoing journey, is really finding the right people for the right uh, phase of your journey, and ensuring that the other people also grow and align with the growing journey.
And do you have any secrets there to share? Like, how do you actually find the right fits in your HR structure to join the mission?
For us, the best, and that's a simple answer. Almost everyone knows that the network is the best sourcing candidate. I mean, you can go to the best of recruiters and stuff. I mean, I'll give you this recent example. There was a role in the marketing team wherein we were looking for certain folks to join a specific vertical. And I remember I was interviewing for the final round, and I was interviewing candidate, and when I was interviewing candidate, I was like completely uh, kind of blown away by her approach to questions, how she was doing things and stuff. And then I just checked up. I didn't check it before getting into the interview, but after that, I asked, okay, how did we source this candidate? And then I realized that that was a referral from our HR itself. Right.
Okay.
So HR had worked with her in a previous company. Right. So
Mm.
now the benefit was that the HR knew the way we work. HR knew how do we like things. So the candidate came in pretty much. The HR could do that pre-filtering, or any other candidate. Like today, I've gotten a resume from one of our tech team members saying, "Hey, please review this. A friend of mine looking for some business development role." Now the thing is, I mean, I know that that employee has sent this after applying n number of filters, right? It's not just some random resume that he would have sent. He knows what the other person is signing up for, and the other person will also know what they're signing up for, right? So the biggest thing is that the issue ends up being when, let's say, I hire Mark, and then Mark comes in and realizes, hey, GyanDhan is not what I thought it'd be. Right now, with the referrals, the best part is I know what I am buying into. Mark knows what he's buying into, and so the surprises are fairly limited. There will still be surprises, but the surprises are fairly limited. So for me, I mean, obviously, network hiring always has an alpha. Obviously, there is a limit to it, and especially if you want to scale in certain areas, it will be a there will be a concern. But especially at the top level and the mid management level, I think nothing beats a network.
I love it. So many golden bombs dropped today on our audience. It's extremely appreciated. If there was one thing that you could whisper to yourself on day one of building your business at this point, what would you say?
I'll go back to the team matters. I'll go back to the fact that uh, work with people you would want to turn up to the battlefield every single day. I think if you find those people, I think it's so pleasant, it's so fun. I mean, I think if I had to chart out my energy levels, I think when I'm with the right folks, I think I can work 24 hours a day. I mean, your energy levels are at a different level. You don't get tired. It's almost like an adrenaline you're working on, versus if you work with folks where it's a energy sap and energy drain. You might still be having a big team, but I think that's when you lose the fun. So I think for me, it's really, if I had to whisper to myself on the back in 2015 when I'm talking to Jainesh around, hey, let's do this together. I'll just tell him that, hey, let's just keep a laser focus on hiring people, and let's just get the best people and then ensure that they don't go away.
Wow, I appreciate that, Ankit. I'm so happy to see you succeed, and hopefully, the business keeps on growing, and we can have another podcast when you're at your next round. Would be so awesome. Thank you so much for joining us for this episode. Very appreciated.
Thanks a lot, Mark. Yeah. And as I said, I hope that we'll able to prove our hypothesis from this round and kind of, like you said, scale 10x, and then hopefully have another conversation at some point.
Absolutely, absolutely. All right, everyone. Thank you so much for joining us for this episode of Phenoms. If you found it useful or helpful, feel free to hit that like button and, of course, subscribe and comment. All right. See you in the next one. Cheers.